Okay, you should be able to hear me now. Sorry. Hi, Nico. Thank you for tuning in. Um, yeah, what I was saying basically is I have a higher bias, but I wasn't going to trade initially today. However, because I don't think I will have a trade, I decided to trade. I decided to stream. That's why I'm streaming. So London session came down, took out the previous day low and overnight lows, and then we have the highs potentially we could reach for that I want to see if price is willing to reach for, but I'm not really willing to trade it just because of how much of a range London session left. Yeah, you're welcome, Neko. But I still want to see if price is willing to do something like make a run up for this high. I'm gonna try and picture it. I'm gonna try and frame it, but I'm not gonna try and trade it. There's also a nice draw on the dollar that I was looking at this morning. I want to see higher prices for the dollar. This is the inverse dollar, so if you, like at lower prices basically for the DXY, but this is 1 over the DXY, so it's inverse. But I just use it to look at euro side by side, and see we might be closing above this gap. These are the euro futures. So I want to see if price is willing to continue climbing. There's a lot of balanced price range in this area, so you could make a short-term high, maybe retrace a little bit, and after all, there's a lot of fair value gap here that it could move into. But we'll see. Usually if it's gonna run straight to that buy side liquidity, I wouldn't really want to see it fill these gaps down here. It should, be quick entering into this gap and then going higher. But that is something of a kind of a clear bias, I guess, that I have for the dollar. And if the inverse dollar is going to go higher, it'd make it easier for the Nasdaq to make a run higher too. Oh no, go to the other tab. So this down here could be kind of the start of a Judah swing. Yeah, I saw relative equal highs and lows on dollar, so I don't have a strong bias for dollar. Yeah, but I don't know, I don't know, the bias for dollar is, I have a pretty strong one higher. If you're talking about the daily chart, I do agree. I think the daily chart right now is stuck between either wanting to go higher or lower. But at least for today, like, I want to see it kind of run quickly up to this buy side liquidity. I think the fact that euro was not willing to reach into this new week opening gap, I do want to come back to this new week opening gap, but I think for now we might have some work to do higher before doing that. It's kind of like a Judah swing. Dow is tanking. Very unusual. It means going lower. Oh well. Usually tanking. When people say tanking, I mean, I don't know. When people say tanking, I think that means it's going lower. But no, I guess tanking higher. That is huge, huge move. Yeah, I don't like to see that actually. If we're gonna go higher, like if my bias is to draw higher, I don't want to see the Dow be ahead of the Nasdaq, and that consistently every time the Nasdaq is lagging behind the Dow, it's always terrible price action. So or like that bias never happens. So I don't know. We could maybe actually not go higher, but the Dow also has a lot of relative equal lows down here, so it could be a Judas swing too. We're going lower and then later we go higher when the Nasdaq leads again. We'll see. The S&P just looks terrible too. Like it's just in a big consolidation, and I mean, it is understandable. We are the first week of the month. I don't try and do too much on the first week of the month. So I don't have high expectations really. I'm sort of just waiting until I have a better idea of what the month wants to do. And usually the month of July is a bullish month for the first half of it. So a lot of people right now are saying on the daily chart that we might be seeing a reversal. We might be seeing on the daily chart because on the daily chart the Dow has Nasdaq made a lower high, while I believe the Dow, no, not the Dow, sorry, what the heck, this chart looks terrible. What? This is a terrible chart. Yeah, for a second I doubted that was 2024, but you see the S&P made nearly that higher high, so I don't know, a lot of people think that this might be like a top, and it could be a short-term high, but I think we're going to come back up here this month at least and run it out. Yeah, the Dow is always doing its own thing. I don't it sucks, but you know, it is what it is, man. Now I don't want this fair value gap to fill if the Nasdaq can continue dropping to the low right now of London. This should be an institutional order flow entry drill. ICT recommended more research center for seasonal tendencies, and I see on their paper right there, right here, July is pretty much always a bullish month. But another thing that makes me think it's going to be even more bullish is, remember, in May we're usually a bearish month. There's a saying, sell in May and go away. And the fact that May this year was bullish tells you that there is a lot of bulls in the market. Like, the market really wants to go higher. For it to break a seasonal tendency, like, it really needs to want to go higher, and it's going to be violent. I did say that, I believe, when he talks about trading in high probability conditions and navigating markets, that Twitter space. He says that when seasonal tendencies fail, it's usually very aggressive in the other direction. Some of the best times to trade. So if that occurs, and we had May go higher, I think that also this month should be very bullish, a lot more bullish than usual, at least for the latter part of the month. So I don't really hold the idea that we're gonna retrace a whole lot, and we're gonna see like a big down move right now. But it's possible that on the daily chart, we're just retracing a little bit to start off the month, maybe down to this low, possibly. I'm a little bit of a nut job when it comes to things being on my chart. I don't like it when it's visible. I know some people just leave it on, it doesn't matter to them, but I hate it when my things are visible from other time frames where they shouldn't be. Definitely, do you think sell side sweep, also weekly BSC next in the 2 to 3 days to invite shorts before we explode up would be possible? Yeah, I do. I don't know if that was a little late, but yeah, that's basically what I said. Potentially, possibly a sell side sweep. We could look at this fair value gap. However, it's possible we also leave it open. I think what's more likely to happen is we find a support on 50%, or somewhere around in this fair value gap, and we leave this one open. Then there's that low, and then I don't really see the sell side yet. Like, I don't really see that sell side yet. It is in the, I'm keeping in there because it's in a 60-day look back. This one down here too. But that's the only reason I have those lows there. I'm not really framing that yet. I don't really try to pick tops either. But because we sorry, voice crack. Yeah, because we've been going up so much, it's possible we see just a tiny sweep make people think the market structure is shifting and we're gonna go lower. Because I know a lot of people are saying reversal. But looks like, yeah, this institutional full entry drill would have worked down to the sell side. So I mean, that's something that I could have taken. It's outside the time I trade. But yeah, this is what I mean. Like, usually, kind of like 9 a.m. will make its move. It'll make its initial move lower, and then it's done when London acts like this. So you see how London was super bearish. Either 9:30 a.m. would have went higher, traded to the buy side, or it traded lower here, the previous day low. Now this could be a Judas swing, but because of how London traded and how the 9:30 open already expanded a whole lot, I have lower expectations for the rest of the day. I did paper trade this move down though, but I would not have taken that on my actual account, on my funded account, just because of the rules I have in place here. I'm more likely to lose and to fail whenever I try and trade in conditions where we've already taken the liquidity, the draw that I want to see during London or during the 9:30 open. And then we'll sit tight for the news. Maybe 10 o'clock is going to provide a whole lot of volatility that and do something that I'm not really expecting. I want to see how far it's going to drop here. That is Wednesday's low, and hold on, 1 hourly chart. We've kind of sweep the previous day low and the overnight low pretty well now, so it could close or not. It's wicked far enough, I believe, to give the impression that liquidity was, that the market shift and that lost support. So we'll see if the break of that low, I think that's the previous, no, that's just Wednesday's low. Wait, is that the previous? No, it's just Wednesday's low. We'll see if that sends price higher. We're way beneath the midnight open. So I would kind of be wanting to see more buys now. I want to see price sort of slow down a little bit, maybe leave a breaker on the 5 minute or 1 minute. So the next couple 5 minute candles, I can expect them to be not really to bear much trades, just to kind of be a bit slow, set up for some sort of reversal. So I guess it'll sit tight for the next 10-15 minutes. Maybe look at do it like this. Damn, it's really dropping. Okay. Also, one thing I did not check is regular trading. No, nothing there. Alright, so I'll sit tight. And the Dow is still going higher. That's actually crazy. What the heck? This is not, like, this is just absolutely terrible. The S&P at least is trading with the NASDAQ. See, one thing though is the NASDAQ is much more bearish. You see the S&P has those highs that, you know, went above the 8 a.m. high. Still was beneath the London high, but you know, look at the pre-market ahead of 9:30, how the S&P barely got above those highs, and the NASDAQ completely failed to get above those highs. That is a lot more bearish, and the NASDAQ's the one that's relatively weaker compared to the S&P, and so it's drawing lower a lot more. If you want to take shorts, you want to be taking them on the S&P, and if you want to take longs, you want to be taking them on the Dow. But now, if I'm, you know, now let's say I start trading. This is why I wanted to stream. Now I start trading, right? And I'm way beneath midnight open. I'm only really looking for buys here. We took sell side liquidity. I'm not chasing price lower. My rules say you can only look for buys. Well, which one is the relatively stronger one? The Dow, the NASDAQ, or the S&P? It's obviously the Dow. So would I be comfortable buying the Dow? No, I wouldn't. So it's not really correlated right now, and it's low probability, which is why I decided to just stream. The Dow never fails to not impress. Yeah, yeah, the Dow is a terrible. It's like, in forex, it's like the pound. I usually look at the pound, but I stopped looking at it because, well, the pound is the one that's more bullish, since if you look at where the 1800 opened up, it's way above its 1800 compared to the dollar and the euro. But because of how, you know, terrible and how slow the pound is, I just don't even look at it. I just look at the euro and the dollar. There's always not one in correlated markets that's just super terrible. Nobody wants to look at. Oh, I haven't looked at gold actually. Where is gold? Okay. Would I still anticipate even lower prices today? I wouldn't say I would anticipate it, because for me to anticipate something would be like, I want to see it happen, and I'm not comfortable anticipating that when we're this much below the midnight open. Is it possible to keep dropping lower though? Like, yeah, but it's nothing that I would try and trade on. Nothing I would try and foresee. Like right now, I'm only wanting to see higher prices. Like I don't care what price is looking like on the hourly chart or anything. If we're beneath midnight open, I just default to I want to go higher. If we're above midnight open, I default to I want to go lower. I know though that that may not be the case, and so that's why I'm just not trading it, because it's against my rules. Because if I try and trade it, obviously it's not gonna work. But yeah, like it can keep dropping higher, lower. The this 4 hour fair value gap is obviously not holding price, so if it's not gonna reach, maybe it's just reaching for that low. Maybe it's just wanting to trade beneath this short term low here. However, we kind of took out that liquidity over here. Right, we had initial low and then we came back into it and expanded and went way higher. So the fact that it's coming back now, I don't think it's just reaching for that low. I think it's reaching for something deeper. It could be. And so I would look at 50% of this discount wick at 2 a.m. I could look at on the 15-minute chart maybe a breakaway gap like this one over here at 4:15 a.m. on the 25th of June. And what are these lines? I actually don't know what these lines are. I think it's a daily chart. Okay, hold on. Now that's really pissing me off. What are these? Oh, that's the weekly fair value gap. Yeah, so the weekly fair value gap, 25%. That's something I could look for. And then there's the sell side liquidity down here, which is ultimately a draw that I want to see at the beginning of the week before NFP. I want this sell side liquidity to get hit. I don't know if it was going to be. I don't know if it's going to be today. I wanted to see it maybe tomorrow, but it could be today. I mean, 10 o'clock news hasn't even came out yet. I don't know. I think 10 o'clock news could maybe keep pushing price down even more. I'm going to get rid of the 4 hour fair value gap just to make my chart a little clear. You see how nicely price reacted off that inverse fair value gap on the 15-minute chart. Is it? No, on the hourly chart. This is an hourly inverse fair value gap. Makes an up close candle conveniently here, gets beneath it, finds resistance. I don't know why I had that one on out of all the ones I could have picked, but oh, no, it is a 15-minute fair value gap. I had this one on because look at the bodies over here, how they're playing around it, and then price comes and finds support on it here. So that's why I kept it on, because the price is referring to it in the past, and I want to see if it's going to continue referring to it in the future. I'm getting a call. Alright, I gotta go downstairs real quick. I got just something to do, 5 minutes, and I'll be back. But yeah, well, it's fine anyway, because for the next like 5-10 minutes, I'm gonna let the news come out. Another 5 minutes. I want to see those 5-minute candles sort of consolidate a little bit, move sideways, then maybe see a breaker on the 1-minute chart, up the 5-minute chart, before doing that. Paolo's calling me. Yeah, I wish he would call me. I'll tell him he's being an idiot. No, he's actually super smart. I have a lot of respect for how smart the Federal Reserve is with their monetary policy, but it's pretty fucked up what they're doing, and not many people understand what they're doing. But yeah, I'll be right back though. Hello. All right, I am back. It looks like we did not consolidate. We just started to run higher retracing. That's all right. The Dow is stalling a little bit now. So at this point, I have no idea what's gonna happen. I couldn't tell you. 10 o'clock news seems to have driven price higher, and I wouldn't be trying to trade anything. If we want to keep going lower, I'm just not seeing the signatures that I would want to see, like this 15-minute candle pushed lower, this one at 10 o'clock pushed up against it, and it's sort of, if we close up here, oh no, this is hourly chart, so we can still actually go lower. But yeah, the 15-minute chart, at least this fair value gap's pretty nice. It could just be retracing the trade into this fair value gap. And the 5-minute chart, though, I don't like how we're completely filling in these fair value gaps. It's just I don't know. I wanted to see some breakaway gaps, some gaps left open and not traded to see those lower prices. So the fact that we're now, those down close candles are no longer being traded through, and the up close candles seem to be acting as support, kind of telling me that the order flow might be changing. But I need to see that occur on the 15-minute chart. I don't see that occurring on the 15-minute chart yet, so we need to wait a little bit, at least until this 15-minute candle closes, before there's anything that I can look at and I can say, okay, I have a good idea of what this is going to do. That's why I almost always just look at the 15-minute chart, and I don't do anything on the lower time frame until I have a good idea of what the 15-minute chart, what the order flow is on the 15-minute chart. S&P not showing signs of weakness. So what do you mean? Like what makes you? I'm not challenging that, but I'm just because I'm not looking at the S&P. So what what makes you think it's not showing signs of weakness? Echo. Yeah. Yeah. I mean, yeah. The 15-minute chart. The thing is, it kind of already ran liquidity with this London range, right? So the it doesn't really need to do it again, and yeah, like the Nasdaq obviously failed to make a higher high above 9 a.m. Anything before 9 a.m. the Nasdaq failed to make a higher high, and then the S&P did do so at 9:30 open, make a higher high. So it's showing that it's slightly stronger. But one thing you'll actually find very often is the Dow is always the one that's going to pose the Nasdaq, and the S&P is always going to be stuck in the middle. So it's not the Dow is going lower now. It's not too surprising that the S&P is kind of in the middle here, but yeah, I don't know if this is necessarily showing signs of strength though. So I wouldn't have a strong bias on the S&P right now. It can continue going lower or it can go higher. Right now though, the order flow is kind of looking from at the Nasdaq. It's looking like the order flow may turn to bullish, but I need to wait until to see how this 15-minute candle closes before I do anything. Oh, what the heck? What just happened here? Is this just the futures? Oh my god. This is ugly. Okay, my bias is to go up to the buy side liquidity. Obviously, the euro had a huge wick. Yeah, that is crazy. I mean, that move happened within 15 seconds. What is that like? How many? That's 19 pips? I think that's 19, almost 20 pips of movement. Damn. So I don't know if it's gonna go higher at this point. If it went up this high, I don't know. This could just be. I usually ignore these big wicks. I pretend like they're not there. So I often look at the bodies, how the bodies are looking like. But yeah, like this, I don't know if the buy side liquidity could still be a draw. It maybe tomorrow. Okay, I see that 15-minute fair value gap rejected this bearish fair value gap. So yeah, it looks like the order flow on the 15-minute chart is still bearish. I was worried that it could start to close up into this gap and then maybe start to go higher. And the S&P is probably, yeah, it's dropping. S&P finally dropping. The Dow is starting to go lower too. So that's it's probably gonna be it for the day after it drops down here. Like I wouldn't really want to see anything else. I don't know if I'd be looking at reversals right now. I'd have to wait till the next session, like lunch hour or something like that, before looking for anything else. I don't like how it's come that low and then quickly retracing. I would want it to keep going with speed and distance. So, and I'd like for it not to trade back above the highs of the previous candles, like not even enter these fair value gaps. If it does, it'd just be more bearish, but yeah. Yeah, see, I want those down close candles to have prices, trading through them, making new lows each time, and then really drawing lower. Total so far we dropped over 100 points. That's a lot of points. Crazy bearish day. Yeah. And yeah, even though we had a bearish day, was there anything that I would have trusted on a live account according to my rules? No. Like there is a breaker set up there. It does retrace OTE of the London range. It does continue to expand, but does it ever get it back above the midnight open? And no, it does not. And well, actually, there's a small fair value gap in the hourly chart too. And then it continues to draw lower, already into a premium. This is like a second stage market maker buy model. So I just didn't see a significant draw in liquidity enough if I zoom out and stuff. So, but yeah, I would expect it to continue running, and then if not today, tomorrow, hit that sell side liquidity, and we could start to go higher from there. And yeah, I guess that's all for today. Wish I could get the boxes off my chart. I don't like the shaded areas. Just want to see the dashed lines, but whatever. But I'm probably gonna let it go until like 10:30, and then if you have any more questions, Neko or anyone else watching, feel free to ask, and then I'll I'll probably just shut it off at 10:30. Yeah, basically, I'm probably done. I'm getting ready to close it down because I mean, there's nothing really else that I want to see for the session. I don't really want to see a reversal. I just expect to continue going lower. So I'm kind of like done tape reading. Uh, I'm just gonna try and keep an eye on it. If you have any questions, I don't mind if answering until I close it down. Do you use the concept IRL to ERL and vice versa to a higher time frame to determine the bias? The concept IRL to ERL is I heard it. I heard a lot about that concept. It's a pretty popular concept. I don't know exactly who kind of taught it like that, uh, but I would say I do use it. It's just that I don't really talk about it. I have my own way of kind of looking at it. But from what I understand, it's internal liquidity on lower time frame that runs to external liquidity. So I think like this would be an example here where we took out an internal low and then we're now driving higher to take out an external high like here, which could be a possibility, but with how already bearish we are this morning, I'm not really looking to try and trade that if I have that correctly. Like if that's what it is, then yes, I do use it. I just don't use I don't like use the concept as I guess it's known. I kind of just I don't know. I don't think I don't know who taught that concept IRL, but I never really learned it that way. Like I don't describe it as IRL. Looks like it was Sir Pickle. Maybe that introduced it. Yeah, I had seen it on Twitter. Sure, yeah, find me a lesson. Yeah, but I guess I do use it. I just don't use it as it's referred to. Like I don't refer to it as IRL, ERL. Um, yeah, when liquidity is taken, I do expect retracements, or I do expect retracements to induce more liquidity. It's never really a concept that I saw it on Twitter, but it never really resonated with me. Like I'm much more effective in the markets personally. Like when I look at just market structure and how breakers form and how order blocks form. I focus on the formation of good breakers and order blocks within premium and discount arrays that have alongside with a bias, and that's just the way I try and trade the market. I don't really, I guess, I, I guess use resonate with that concept ERL to IRL as much as I do with what I consistently use. And that might change to the person, but yeah, I'd be interested in the lesson for sure. See where it came from. Month 4 content. I don't remember if I watched that month. Because core content, I didn't watch all of it. Just some of the months. I watched month 5. I thought month 5 is one of the best. I use month 5 a lot. The IPTA on a 3-day, and I also use the daily IPTA. Oh, month 4, I did watch month 4. Some of the videos. Like, I watched interest rate effects on currency trades. I watched reinforcing liquidity concepts and price delivery. And I watched most, well, I think all actually, the blocks. Liquidity voids, liquidity pools. No, I watched all of month 4, except for the last 2. Double bottom, double top, and divergence phantoms. That's a funny one. Divergence phantoms. I wonder what that's about. He probably talked about it in reinforcing liquidity concepts and price delivery. You're still expecting lower prices. Um, like I said, lower prices wouldn't be trying to trade it. But yeah, like for today and tomorrow, I would say lower. Tomorrow maybe trade it lower, but yeah, today or tomorrow I want to see the sell side hit. Doesn't have to be right now. You know, from an intraday perspective, it's not really looking too bearish, obviously, because it retraced initially, got down. And I did say over here how I didn't want to see these fair value gaps be filled. I didn't want to see them be traded too. See, we just made 20 points with that fair value gap there, and then we did continue to trade lower beneath this low. But as soon as we start to come back in these fair value gaps, and especially as we close above them, you know, that's telling me that okay, maybe we're not actually going to continue going lower. This is a whole breaker here, and I would be deviating this range. But with how bearish we are, I mean, I don't really want to see anything really today. I don't really care to see anything else that's high probability. We'll look at the 50% and I'll look at the 100% to see if it's gonna drive up there. But yeah, like it doesn't, to me, it doesn't really matter if it does. I don't like how that hourly chart, this candle is closing up into this hourly candle, showing that it's going to slow down those lower prices. And 50-minute chart, once again, this huge candle could also leave an order block because we did take out liquidity the previous day and Wednesday's liquidity. So all in all, it's telling me that, okay, it might actually be done going lower. If it is going to go higher, I don't really want it to retrace into this range. Like, I don't want these fair value gaps to get filled because we have this big inverse fair value gap. And I think that that should hold price. So I would have something like this as a bias. Not a trade, but as a bias. But yeah, I wouldn't trade it though because at the draw, I'm expecting a draw down here. So I'd rather wait until we have that draw down here. It's going to be a much higher probability if you just wait and be patient until we see a potential draw to sell side liquidity instead of trying to trade what you see intraday on a day that's already moved so much with London session and the 9:30 opening price from 9:30 to 10 o'clock. And now it's probably going to be really shit. Like it could go higher, but it could also just consolidate and just slightly go higher very, very slowly and just potentially chop you around more than actually allow you to trade. So I wouldn't really want to be doing anything. I like this though. This is good. Now that the Dow's actually dropped all the way back down. Because that shows that the Nasdaq might now be the one that will lead to go higher if we're wanting to see higher prices. So I'm only going to make a case intraday for higher prices now, but for the actual high quality trades, I do think it will be lower. So I wouldn't try and trade this anymore, but instead just wait till tomorrow or maybe in the afternoon, get a setup lower that could lead into tomorrow. Let's see how the dollar's playing. Okay. Alright. So it's 10:30. I'll probably end the stream now. I gotta do a bit of work before ending. Before it's Canada Day today, and I'm in Canada, so got a lot of things to do today. And I'll probably have to stop the stream early and then just do a bunch of work. I should stop the stream early. But hold on, one more comment. Do you always wait for price to get into a premium to short or discount to go long? Yes, absolutely. 100%. Like, the way I trade is, if I had to put it very simply, is there's some price action, whatever. I wait until it's taking out a sell side or liquidity level, and then I try to anticipate a reversal. But to do that, there's certain things that need to be in place. We need to be above the midnight open. Let's say that's the midnight open. I always have it in purple. So I need to be above that midnight open. And we also need to be at a right certain time. So it needs to be within a specific time for me to look for that reversal. And then I'll look at the dealing range, which is a range that took out the high and the low. And like today, the dealing range would have been on the I always look at this from a 15-minute chart, but the dealing range today would have been during London, because London's the one that took out the high and the low. So over here, that's the dealing range. Anything above 50%, I'm looking for sells, but we also need to be above midnight open. So because London already expanded, I'm not really liking it too much, and so it's just going to be a weaker dealing range, because its dealing range is in premium. But because it's part of a higher time frame market maker sell model, it's possible that it still works out pretty well, right? So I also look at the higher time frame, and the higher time frame right now, where is the dealing range? The dealing range is from this high to that low, right? So we're beneath that 50%. And so if we do get back above 50%, that's why this morning getting up, initially I wanted to see 930 open up and go higher, because I wanted to see it get to this upper portion of the dealing range. Then yeah, I do look to see the highest probably going lower, and I try and trade lower. But if we're not above that 50%, then it's like, okay, intraday there might be something like I was able to find the trade lower, but I don't know, it's just usually not as extravagant, not as fast, not as high quality. Yeah, you're welcome, Neko. Anytime. Yeah, if you want to learn more about dealing ranges, by the way, it's not really talked about much, but the best way I can show it is the way I really learned was trading Cameron's model. And if you don't know Cameron's model, it's just simply 5-minute chart, wait for 930 open up, first 30 minutes, trying to pose that first 30 minutes. What you're looking for is a 5-minute short-term low to be broken. You trade 10 o'clock to 11 o'clock, so that would have been here, and then you go to the 1-minute or 30-second chart and you long the first bullish fair value gap that you see. So like this one down here, or the inverse fair value gap. And it's very simple. You just look at a 5-minute chart, no bias or anything. Well, have a bias, have a draw on liquidity, and then just wait for the first 5-minute short-term low or high to be broken, and then try and just short the first fair value gap created. It's a very simple model, and just hold it for like 10 points and then tape read the rest of the time. But the best way I could, no, not this one. The best way I could show it is, I did this back in August last year. Alright, yeah. This is the best way this is when I really like understood dealing ranges. I understood what the market was reaching for, and this is how it was, I use this all the time when I'm in a trade from down here. That concept that forms the breaker. This is how I start to anticipate the breakers forming whenever there's a discount array, and we have this dealing range. I almost never look at the breakers. I always look at the move that drew into to create the breaker at the low. So as that low's broken, this range from high to low, that's a dealing range. That's something that you project. Premium array, when it breaks above dealing range, it shouldn't come back. Why? Because it's a balanced price range. We went down, we had delivery higher. So this is a completely balanced price range. That's what makes breakers strong. But understanding why it's a breaker and the mechanics behind the breaker, that's important. And that's what a lot of people miss. They're looking at fair value gaps and looking at it's good to look at liquidity, or they're looking at heartbeat patterns and stuff like oscillators and triangles. But yeah, like this is a golden picture. Like this is the one, my first model, the thing that when I understood the markets, kind of like everything started to be a lot better for me when I understood the dealing ranges. And there is one video that I'd recommend from ICT actually about dealing ranges. This isn't on any this is just a video he posted himself in 2022. It's not on any playlist. Dealing range ICT, type that into YouTube. topical study. This one, very good video. I would show this to people beginning trading, learning ICT. It's pretty advanced, an hour long, but 2022 ICT mentorship topical study dealing ranges. I don't think this is in the 2022 mentorship because I didn't watch the last episodes, but it says 2022 ICT mentorship, but it's not part of the playlist. It's just by itself, and it's a very good video. So check this one out if you want to learn more about dealing ranges. What is your model, by the way, right now? You're welcome. You said your model has much more success. What do you trade? Just curious. Okay, nice. All right. Well, I'm gonna try and I only factor in discount premium. Maybe that could boost my win rate. Oh, absolutely it will. Yeah, if you factor in discount and premium, that will reduce your exposure and you will trade a lot less. Like at least for the summer. My trading calendar for last month was pretty empty. I took 7 trades, I believe. Hold on, why is it not showing? Okay. Oh, okay, July. Yeah, this was my trading calendar. So I took almost no trades. And this one was a very bad trade. I shouldn't have taken it. But obviously you can see that I'm not trading much, like 2 trades a week max. And that's because I'm qualifying the trades. But reducing your exposure is also going to increase your win rate. So it will make you more accurate, it will make you have a higher win rate, but it will reduce the frequency that you're trading. And so I don't know if that's something that fits you. Maybe you want to trade more often, you're not patient enough to wait. I don't know, that's something you have to figure out, right? Yeah, getting stopped out in lower time frame before price heads draw liquidity. That happens often. And you need to understand that when that happens, it's not the market it's out to get you, it's you. That's just you didn't place your stop loss in the right place. Right? And so I think that happens when people spend too much time looking at the lower time frame. Because they used to happen to me. I'm talking about my experience, not from what I see other people doing. But I used to always just go on the 1 minute chart and try and trade the first fair value gap that I see. I instead of sticking to the higher time frame. Like now I know like why this fair value gap is likely not to work very well. I know that it could work. It could end up drawing up here, but it could also just retrace a little bit more. And so I don't try and trade it. I focus on the 50-minute chart. Well, 100%, but I think your problem might just also be focusing on the 1 minute chart too much, right? Like the try what fixed me is Cameron's model. these Cameron's model. It's a smaller time frame model. It's a high frequency trading model, but it's just simple. Like I looked at 5 minute highs and lows. Like if I go back to the data from back in November and October, um, let's I don't know, no filters. Okay, there you go. So yeah, like some of these trades were really stupid. The ones that have screenshot. Some of these trades, like this isn't it. That's not a good example. Why do there's no pictures? What the heck? Okay, like this one for example. Short-term high. There's a 5 minute PD or something. No, not a good example. These are just super mini trades that I just looked for. No, that's not a good example. I'm looking for one that's like a terrible trade, but it's still one. Okay, it looks like I was on side. There's okay. I know there's a couple trades that I took. Maybe it's in October, where I was completely offside, but the trade still won. So like for example, I'll try and find it here. Like I'm looking at the 5 minute chart. I see the break of a 5 minute short term high. Like maybe I see the break of this one here. Let's say like we get above this short term high right here, and then I try and go short. So then I go on the 30-second chart or the 1 minute chart, and I short the first fair value gap. Right, it could be this one. Okay. So let's say I have a draw. I would put like a 15-point stop, and then a like 12-point take profit, or sometimes it was just 10. Okay, now let's say that I had gone in at 50%. This trade would get stopped out. It's a bad trade to take, but it would win, right? Because my take profit is super small. So the way that session from August, October, and November, sorry, September, October, and November, the way I really learned was that I was wrong often. Like sometimes I was completely offside. The trades I was taking were just terrible trades. They were offside, um, and just I'm really trying to find an example because I know there's this one that I just took and was very much offside against where the market was actually drawing to, but it still worked simply because I was just going for that 10 points. So it retraced by 10 points. Like maybe I'll draw it. It might have been just going up like this, and then I took a short at the high of the break of the 5 minute high, and then it retraced like this, and it worked because I was only going for 10 points. The thing is that 10 points that you're going for, it's not going to affect your mentality. It's not going to make you angry. You're going to see success while you're actually learning, and so it's going to be easier for you to learn that way because you're getting less frustrated. And then slowly, as you can qualify which trades, like as you see in the month of November, almost all the trades were on side, right? Some of them were losses, and obviously I was trading a whole lot because it was a high frequency trading model. Oh yeah, this is what I was looking for. Yes, a trade like this. Okay, so like I can see now, looking back at this is a terrible trade to take. Right? This isn't a good trade. Um, but at the time I thought it was a good trade, right? So now I'm able to go and see, why is that small trade there not a good trade, and I'm able to look at that without being frustrated. In fact, I'm frustrated that I took that trade even though it won because it's not a high quality trade. And then slowly, as you start to become more consistent and you're seeing more and more of these wins consistently, then you can start to go for 20 points. then you can start to go for 25 points, 30 points. So I think what might fix your problem is maybe not necessarily premium and discount, although I think that could increase your accuracy. But if you're struggling to see profitability, I think that you should scale it back and then go for less points, something like I did here, right? And then maybe afterwards you can go for bigger trades. Like I my trades right now I'm going for 20 to 40 points, but it wasn't always like that. I had for last year there's months, the winter months where I gave up huge moves. Like I knew on some of these trades that I took that it could run much higher. I could be holding it for, oh, this is a good example. This is another good example. I'm able to see that how bad it is, and then kind of filter it out. I'm filtering it out. This is actually another good example here. Those are the ones I was looking for. That's a terrible trade to take. I'm able to filter that. But some of these trades, like let's say this one here, I know that I could probably hold it to this sell side. I know I can hold it to a lower sell side, right? And this is another bad example actually to filter out. But I don't, and instead I'm tape reading it because I know that if I hold it, I'm gonna get stopped out. Like if this one I decided to hold it, I would have gotten stopped out. So this is what I mean, where you slowly try and go back on the leverage or go back on the frequency you're trading, whatever it is, and just go for less points. If you need to go back and take less trades, that's one way. If you need to lower the leverage, that's another way. But another good way that not a lot of people do is lower the amount of points you're going for. Don't try and go for as much profit. And yeah, I hope that helps, and let me know if it does help you, because that's what helped me more than dialing back on the leverage and the frequency of trading that I do. Anyways, I'm probably gonna end the stream now. You see, we didn't really do anything. There's nothing really exciting to look at. Let me just one more time look at the dollar. Okay, so absolutely dropping lower, filling that new week opening gap. Euro might come into that new week opening gap now. And the pound probably took, the pound did take out the high. And it's obvious to know why it took out the high, because it was much higher above the 1800 open than the euro and the dollar were. And let me just look at the bonds. Bonds dropping today. Okay, well, alright, no surprise. Alright, that's all. So thank you very much for tuning in, Neko, and anyone else that may have watched at the same time. And I don't know, maybe I don't think I'll stream tomorrow, but I want to probably stream Wednesday and Friday. Alright, see you then.